Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Currently the Australian dollar is sustaining its 2-month bounce and now looks towards the key level of 67.65, which was briefly touched today before its retreat. Although the markings are positive to the current rise, we need a break of 68.10 to support this engulfing candle, and if so, would reinstate the upside towards the region of 69 cents and maybe even clearing this 60-day moving average, seen roughly around 68.65. In light of the pattern though, it is a little bit to the question of whether the market can sustain, because we've hit the midway point and rejected, and therefore could eventually see this bullish candle negated. I feel the longer that we hold under 67.65, then the market may actually drop back towards the bottom side of the range, seen at 66.5 cents. But as I mentioned, the engulfing candle does need to be confirmed, and a break of 68.10 will give the top side call. But until then, I feel the bears are still weighing on the market. The euro finished higher on Wednesday, however, some exhaustion signs are slowly returning. With that said though, we need a break of 107.0515 to reinstate a potential bullish call to 108.4045. In the overnight economic data, the US ISM manufacturing index release triggered fresh concerns about inflation, while comments from the US Federal Reserve policy makers supported a hawkish stance to their policy. The Institute of Supply Management survey said its index tracking factory activity was little changed at a reading of 47.7 last month from 47.4 in January. The index fell below the threshold of 50 into contraction territory for the first time in 2.5 years in November. However, higher borrowing costs have slowed demand. Furthermore, fueling the concerns about US interest rates, comments by Minneapolis Federal Reserve President Neil Kashkari said that he was open to the possibility of a larger interest rate increase at this month's policy meeting. Whether it's 25 or 50 base points, he hasn't made up his mind as of yet. So looking at the technicals, well, the dollar's still a little bit weaker, around 104.40. The euro is slightly appearing somewhat hesitant as it rises towards that target, as I mentioned, at 107.0515. If the dollar index does regain, which I feel it may, then therefore could see the gains erased from the euro and look back to the bottom side of the range, somewhere around 105.2025. Still holding to a relatively firm stance for dollar yen as it looks closer to that 136.70 target. A break there should give further upward momentum and look towards 137.30 to 137.90, and still likely to see any pullback to be shallow. We are overbought, so it might be a little bit of a bumpy journey to the upside, but overall I still feel the broader target remains somewhere towards 138 to 142. A little bit of a choppy ride when it comes to sterling after the Bank of England, Andrew Bailey, said at this stage, I would caution against suggesting either that we are done with increasing bank rate or that we will inevitably need to do more. However, he did reiterate that the UK's labour market is extremely tight. The Bank of England is expected to lift interest rates from 4% to 4.25% in March. With the technicals breaking down, does give some aspect that we are looking back towards the bottom side of 120 and maybe even lower down to 119.60 and reassess from there. The gold aspect, well, the market's been fluctuating in a slightly bullish manner, even though the technicals are skinning a little bit somewhat tired. I feel that towards 1,838 is a little bit overstretched and therefore looking for a pullback. And if so, we are a break of 1,828 should expose the region back to the lower side of 1,800. Finishing up with oil, market's getting a little bit also tied towards its top side as the climb now goes into this third consecutive day that we may find the resistance at 78.70.90 capping. And if so, could see a pullback towards the bottom side of the range, seen at 74.70.90, and reassess from there. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the interest rate report. I hope you enjoyed the great start of the day.